to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, this week's market wrap with commentary and analysis from Money Metals Exchange, the company named Best Overall Precious Metals Dealer by Investopedia.
Welcome to this week's Market Wrap podcast. I'm Mike Leeson. Gold and silver markets drifted lower again this week as investors brace for additional Fed rate hikes to come. On Wednesday, the Federal Reserve released the minutes from its latest policy meeting. Policymakers agreed on the need for additional increases in interest rates. They settled on just a 0.25% bump up at their last meeting, but some dissenters called for a larger 0.5% hike. Since the Fed's last move, incoming economic data has been emboldening the hawks. A superficially strong U.S. jobs report combined with stubbornly high inflation readings suggests central bankers may have more work to do. Following the Fed's policy meeting earlier this month, Chairman Jay Powell declared that disinflation was taking hold. But since then, inflation indicators have shown the opposite, that price levels in the economy continue to come in high and continue to exceed most forecasts. Federal Reserve Bank of St. Louis President James Bullard is casting doubt on Powell's call for disinflation to take hold. Bullard says monetary policy is not yet sufficiently restrictive, and in recent remarks, he warned that if the Fed is too soft on inflation, we risk a repeat of the 1970s.
Inflation's a pernicious problem, so it is a risk, and it does affect. One of the lessons of the last 2 years is that everybody feels the effects of inflation. It's pretty much across the spectrum. So rich and poor, young and old, everybody notices. So if we can't get this problem under control soon, we risk a replay of the 1970s. In the 70s, the U.S. monetary policy did not act strongly enough to keep inflation under control.
Let's hope that we get disinflation in 2023, but right now it came in hotter than we thought.
Of course, the 1970s were a difficult decade for investors. Bonds got clobbered while stocks suffered a severe bear market in real inflation-adjusted terms. Precious metals were the standout asset class of the 1970s, culminating in a manic run to record highs in gold and silver in January 1980. We aren't yet seeing that kind of outperformance take shape. Although demand for physical bullion remains strong, there's little speculative interest on the long side manifesting in futures markets or exchange-traded funds. In recent weeks, traders have been more inclined to sell metals contracts. As of this Friday recording, the gold market is posting a weekly loss of 1.8% to bring spot prices to $1,818 an ounce. Silver is off 4% since last Friday's close to trade at $21.06 an ounce. Platinum is down 1.4% this week to come in at $929. And finally, palladium prices are down a whopping 8.2% for the week to trade at $1,435 per ounce. Metals markets are entering oversold territory and may be due for a technical bounce in the near future. Whether that develops into a more sustainable breakout will likely depend on whether the Federal Reserve indicates it will be winding down its rate hiking campaign. For now, gold and silver bulls will view any bad news on the economy as good news. In other news on the sound money front, both houses of the Mississippi legislature have voted overwhelmingly to exempt physical gold, silver, platinum, and palladium coins and bullion from state sales taxes. The bill now awaits the signature of Republican Governor Tate Reeves. Mississippi is set to become the 43rd state to exempt sound money from state sales taxes. A dozen other states are currently considering legislation to rescind sales or income taxes on precious metals transactions. The more tax and regulatory barriers to broad public participation in physical gold and silver markets that are removed, the greater the surge in buying will be if a 1970s-style mania phase in precious metals ensues. For much more important information on the battle for sound money unfolding across the nation right now, here's a replay of a comprehensive interview of Money Metals President Stephen Gleason on the Gold Exchange podcast this past week. Stay tuned.
We've really been seeing an explosion in this activity in the last few years. I'd say, some of it has to do with our efforts at Money Metals and the Sound Money Defense League. And some of it is frankly just a result of the economic circumstances we're in, where inflation and And the Federal Reserve and all the intervention in the market has really caused some pushback among state legislators and of course, people in general.
Welcome to the Gold Exchange Podcast, where we untangle market and policy complexity using timeless economic principles. For show notes and archives, go to goldexchangepodcast.com. Now, on to today's episode.
Back to the Gold Exchange Podcast. My name is Benjamin Nadelstein. I'm joined, as always, by founder and CEO of Monetary Metals, Keith Weiner. Today, we are joined by a special guest, Stephan Gleason. Stephan, how are you doing?
Hey, Ben, I'm great. Good to see both of you guys today.
Yeah, we're really, really excited to have you. There's some big news kind of in the air in the sound money community, and we thought who better to have on than you. And Keith, how are you doing today? Are you excited? We've got a special guest on. We've got some great topics. Are we looking forward to it?
Absolutely. Stephan's been a good friend for, seems about a decade almost.
Almost.
And client, so Stephan's the CEO of Money Metals Exchange, who's been a monetary metals lessee for maybe not quite a decade, but half at least.
Mm-hmm.
It's always good to see you again, Stephan.
Yeah, it's great. I love what you guys do across the board, and also just the way you're sort of, inventing and creating all the time and really finding solutions, which obviously work, as I know firsthand.
Very cool.
All right, let's jump in with just a basic question, at least for me. We've had JP Cortez on the podcast as well, talking about sound money initiatives. But why don't you give us a quick, broad overview? What is sound money?
Yeah.
Why should we want sound money? And what is the kind of landscape in 2023 for sound money initiatives?
Right. Well, sound money is the system of a monetary system, as Keith well knows, and most of the listeners know, where you have honesty and you have actual money circulating that retains and holds its value, that's stable. And that was the system that we had in the U.S. all the way up until basically 1971. Or at least till 1913 when the Federal Reserve System was created. And of course, that was a system where, the market price of money was set by the market and not by government planners, central planners. And now we have a system of central planning by using monetary policy and pulling levers and creating money and expanding liquidity and contracting liquidity. And it's become a political money. It's become really fake money because we don't even have actual money circulating anymore. It's a representation of money. And that has led to just a complete spiral in inflation and confidence. And so, we look at this problem as mostly caused by at the federal level, by the Federal Reserve System, by the U.S. Treasury, by the dominant economic thought, Keynesian economics, which forced out, sound money thinking and Austrian economics and so forth. And, that's where the problem originates. But where the policy, I think, where the really exciting opportunities to push back and reinstitute, or at least begin promoting sound money again, other than just people doing it privately on their own by going on their own gold standard, their own silver standard, which of course people can do and should do. But more from a policy standpoint, we're seeing a lot of opportunities at the state level to really do the things, at least states that states have some things they can do to promote and defend the concept of sound money. And it's really the province of the states. Under Article 1, Section 10 of the U.S. Constitution, gold and silver is essentially the money of the states. And in fact, states were and are prohibited from making payment in anything but gold and silver coin for payment of its debts. We've gotten away from that. That's kind of a long, complicated, story and a lot of legal questions raised there. But the idea of states reassuming their monetary role in promoting gold and silver as money is not only viable, but it's something that we are seeing a lot of enthusiasm about. And you have a scenario where you have states that are competitive with each other, and you have an opportunity to, push and propose policies and see how they work and see how they're adopted. And then states start looking at what each other are doing. And, we've really been seeing an explosion in this activity in the last few years. I'd say, some of it has to do with our efforts at Money Metals and the Sound Money Defense League. And some of it is frankly just a result of the economic circumstances we're in, where inflation And the Federal Reserve and all the intervention in the market has really caused some pushback among state legislators and of course people in general. And so we're just seeing a tremendous amount of enthusiasm. This year, we actually have more bills than we've ever had. There's 22 states currently, right now as we speak, in this January, February legislative period where a lot of the sessions have come back in. There are 22 states that have bills right now that we're tracking or working on, or even in some cases drafted, to promote sound money in various ways. And we can get into the categories of that, but I can definitely say that it's an incredible increase in interest and enthusiasm and hopefully success.
I can tell you from my own personal experience, having been involved at the state level, trying to promote some of this stuff from about 2012 to 2017, whatever year Arizona finally, after 5 years, passed its watered down gold legislation.
Right.
And my thought then was that the way the media works and sort of collective consciousness, one can be dismissed as, oh, that's some crazy, stupid libertarian thing in Arizona or Utah. Two can be dismissed as a fluke, but 1, 2, 3, many. And we never really got to the many. And I kind of got a bit burned out on it and decided I was going to go in a different direction and try to achieve this via monetary metals as a for-profit. But it's really exciting to see that theory, going into practice, and that now it's not just 1, 2, 3, many, it's 1, 2, 3, 22,
right,
50 states. And I guess actually you got to count, there's a few more that probably don't have legislation because they already have passed something really cool. So it's probably more than half the states either have something currently pending or already passed something. That is, I knew what the theory was in 2012, but I couldn't really imagine, how that would play out, 10, 11 years later. Very cool.
Yeah, definitely that helped get the ball rolling. So those efforts were very valuable in what we're seeing today. And specifically in Arizona, they eliminated the income tax on precious metals. They already didn't have a sales tax. So that was the bill you were working on with the income tax. It had other parts that fell off, I guess. But that's one of the prototypes out there.
Vetoed 3 times by 2 different Republican governors.
That's right. Yes.
And every one of those pieces was hacked off violently by a politicized process that to this day my head still reels from it.
Yeah. But that's one of the model bills on the income tax issue. And it was a really good bill because it was a tax neutral one. It basically, it just says, at the state level, we don't recognize gold and silver as a capital asset that will be taxed by the income tax. It's just like the Federal Reserve note. It's transparent. There's no gains. There's no losses. And, of course, because of inflation and devaluation, that will generally inure to the benefit of people who, sell gold that have gains and therefore won't have to pay taxes on them at the state level. But there's bills literally right now on just like that one or very similar coming up in Idaho, but already introduced in Iowa, already introduced in Missouri, already introduced in West Virginia, South Carolina, Kansas, Michigan, and Arkansas right now. Just on the capital gains issue that started with Arizona and Utah.
That's a big impediment to circulation. If there's enough groundswell at the state level, and dare I hope or dream for it to be done at the federal level, then that's just one barrier removed for the use of the stuff, the way it always was.
Yeah. And the first barrier is the sales tax. And we've seen a lot of progress there too. That was the one area where there was at least some good law in the books. And that was, the idea that when you purchase precious metals, many states would not charge a sales tax. But maybe 10 years ago, there were about 33 states that had an exemption. Today, there are 42. And there are 5 states that have bills that would do the same, and one state that would expand the exemption they have. So, and hopefully we'll pass 1 or 2 of those this year. That's been the most attainable policy change at the state level, is to get rid of the sales tax. And as we've kind of moved away from that, not moved away, but accomplished most of those, we're starting to focus more on the income tax, and on legal tender type ideas, payment mechanisms, and some of the things like holding gold reserves in gold, the state holding gold as a reserve asset. And so that's where a lot of the energy is starting to shift, because the sales tax battle has largely been won at this point.
All over with the shouting, yeah. So tell our audience about the salient points in the Wyoming bill. And so,
Sure.
So the Wyoming bill, just to make sure I understand where it's at the moment, we're recording this on February 7, 2023. It passed the Senate,
Right.
and is pending the House.
Correct.
In Wyoming.
Yeah, and we don't have the committee yet that it's going to. We think it's going to the Revenue Committee, but we won't know that probably till later today. But Wyoming legislation moves pretty fast, so we are going to do our best to mobilize through email and so forth and testify at the hearing, because it's going to come up very soon in the next few days, and it'll either move forward or not, and we'll see. But in terms of what the Wyoming bill does, it builds upon the Legal Tender Act that we helped secure passage of in 2018 in Wyoming. And what that bill did was sort of, it was fundamental, but it was mostly symbolic. But one thing it did do is it specifically said there shall be no taxation of any kind on precious metals, buying, selling, or anything related to precious metals transactions in Wyoming. Now, there already was no income tax in Wyoming, but there was a sales tax. So that obviously impacted the sale of, the purchase of precious metals in Wyoming. So that bill knocked out the sales tax in Wyoming. There already was no income tax, but there's now another law that says there will be no income tax or any tax on gold and silver. It also affirmed that gold and silver are money in the state of Wyoming, and that includes, they call it specie and specie legal tender. So specie would be gold bullion, silver bullion, rounds, bars, valued based on the purity and weight. Specie legal tender simply be a government minted version of specie. And so it declared that they are legal tender in the state of Wyoming, and said there will be no taxation on them. The amendments, which are now being considered in Wyoming, basically add more teeth and implementation of the Wyoming Legal Tender Act. And it does it in several ways. The first thing it does is it authorizes taxes to be paid to the state. Now, there's no income tax, but there's severance taxes from mining and other natural resources that are paid directly to the state. And so now, if it passes, which it hasn't yet through both chambers and hasn't been signed, but if it were to pass, it would permit those who pay mineral taxes to pay those in gold or silver if they wished. And now, presumably, the state treasurer could provide an incentive for them to do so as a way of encouraging people to deposit or pay gold to the state, so the state could accumulate gold directly from tax revenues. There was an earlier provision that was amended out that basically set the same system up at the local level, where they have property taxes and other things, but there was a lot of pushback on that. And so it was amended because of the logistics, and it was not understood how that would be handled. So it was amended just to deal with the mineral taxes in terms of the payment of taxes in gold and silver. And that's where it stands today. Totally fine. Then the next thing it does is it has the state treasurer creating basically a published exchange rate for gold and silver, and what items it might take. Will it take, gold eagles? Will it take just gold bars? What is the exchange rate vis-a-vis the Federal Reserve note? It will publish that information on the Treasurer's website. It will, provide guidance to those who may wish to use it or pay in it. But also, and this is probably the most likely direct result of this bill, if it were to pass, it will cause the treasurer, in fact, compel the treasurer to at least hold some physical gold on behalf of the taxpayers of the state of Wyoming. And so it will put the Wyoming Treasurer's Office in the business of understanding how to, receive, value, and hold gold and silver for the state. And that's going to require, just setting up some systems, probably working with a depository, maybe some outside experts will come in and assist the treasurer in setting this up, build the plumbing, so to speak, for a gold-based system to help make that potential transition down the road more possible or more seamless. And then the part that I think is probably of the most interest to some of your listeners and clients is the provision that says that the state treasurer may invest in precious metals leases and or bonds payable in precious metals. And so if that passes, that will be the first state law that explicitly prompts the state treasurer to look at these kinds of investments specifically. I'm not suggesting that they aren't already something treasurers could do in their states. In many states, they probably could, but this is one where the will of the legislature would be, we want you to do this. And that and by the way, the treasurer in Wyoming is very gold friendly. And he testified in support of the bill. So I think that if we can get this through the House and then signed by the governor, I think we're going to see some really neat things come out of the Wyoming Treasurer's office.
That's really exciting that they can invest it to get a yield on their gold. And I think the lack of the yield is the reason why the mainstream world kind of has a lot of them have a distaste for gold for that reason. Obviously, a lot of them, I was going to say that's the reason, but a lot of them, the reason is it's ideological.
Right.
It's the idea of gold and free markets just, rubs them the wrong way. But, for a lot of people, they just look at it and say, okay, but, holding gold has a cost. And now, if the treasurer's office is realizing a return on their gold, then even the kind of people that are, work in the bureaucracy in the state government can understand that. It's okay, yeah, I get it. Okay, so we have some T-bills that are doing this. We have some gold. Price of gold is going up, and we're getting this kicker of a couple percentage points. And then, for them, that'll click and say, yeah, we like this. This is working well for the state. This is generating returns. We're doing our fiduciary duty for the state taxpayers, and our rainy day fund is accumulating, actually growing,
right?
Because there's a surplus that we can do something with, return to the taxpayers or whatever in future years. Everybody will be excited about that.
Yeah, I think that actually those in the treasurer's office, and I can't speak for them, but I know I've interacted with them, and they do have kind of a Wall Street orientation, which is a little bit hostile to gold bullion and gold ownership.
Right.
But in fact, Jeff Christian, interestingly, a month or two ago on the KE report, did a great job of explaining why Wall Street hates gold. And one of the main points he made, and he said he's been saying it for decades, but I don't think a lot of people necessarily realize the conflict of interest that goes on there. But he said basically that money managers want to sell clients on investments that they know they're going to be able to turn over. And, the average turnover of an investment is 18 months or something like that. And so every 18 months, there's a new commission, a new fee or whatever for that. And so with gold, you basically, when you sell somebody gold, whether it be, probably the case of the state, but certainly with individuals, when you sell them gold, more than likely, they're going to hold on to that for a long period of time. And there won't be another commission for the seller. And so I think, and he sort of spilled the beans on this reality. And so for a variety of reasons, there's a lot of hesitance or just hostility by some of these people. But I think your point, I think that actually the idea of a gold yielding instrument or just a gold lease, which has a yield, actually appeals more to those people. And those are some of the people in these, they're making these investment decisions. So I would not be surprised if they embrace that once they fully understand the opportunity there, even more than they will embrace the requirement that they hold physical gold. But we'll see. But either way, if this passes, it's going to put Wyoming even further ahead than the other states on the Sound Money Index. They're already at the top of, they're only at 54%, but they're at the top. But this will put them even further ahead. But that said, there's other bills in other states that could really,
hopefully other states leapfrog Wyoming and go even farther.
Yeah.
I mean, to me, this is so exciting. Obviously, very validating to the monetary metals business model, because we offer, develop and offer gold leases and gold bonds. And just to see that, now ratified at that concept ratified at a government level. This isn't wild-eyed crazy people, in the comment section on zero hedge. This is state government. That is just super exciting, for us as a company, but also just for the gold standard as a movement. That here we call it the Warren Buffett objection. Why do you want to own this thing? It's neither productive nor procreative. It doesn't generate a yield. You buy a lump of gold, stick it in your desk drawer. 20 years later, it's funny. He also said that 20 years later, it's not churning over 18 months. 20 years later, you pull that lump of metal out of your desk drawer. It's still the same lump.
Right.
It hasn't done anything for you. And when the mainstream world realizes that it could do something for you, it could be a regular conventional investment. A gold bond is a lending instrument that's financing a productive enterprise, and like any such instrument, it pays an interest rate. When people realize that, then some of the tar that's splashed onto gold, is cleaned off, and people can say, oh, this thing's actually pretty shiny, and it's pretty, and it's nice, and we can get involved with that. And if that happens, who knows? This gold idea might sweep the world even one day.
I've noticed, and when talking about the whole idea of yield versus holding the physical, I've noticed that those that say, okay, the yield is inherent, we got to have yield, we can't have no yield, and they sort of and of course yield is good, particularly if it's in gold, but it glosses over the fact that gold is, I consider it like cash, except it's better than cash because it doesn't lose its value over time. And they seem very focused on yield. Like even, a few years ago in Wyoming, we had a couple people saying, we got to have a yield. We can't just have gold sitting there. But yet they have third world debt that they own a huge amount of. Yeah. And it has a 9% yield, but it lost 30-40% of its so whereas gold has no yield, but it's gaining in capital, at least vis-a-vis the devaluing Federal Reserve note. And so it's interesting, the mindset is, if it doesn't have a yield, then you're not making money, but they're not concerned about the negative real return they have on their bond portfolio, which has a 1% 2% yield, but is actually getting a negative 5% real return. So there's a sort of a psychological glitch that people have when they think about physical gold. But if you can have physical gold and yield, all the better. You did a study I saw where you looked at the performance of a portfolio with physical gold over the last 20 years, and it was adding 10% to the portfolio. And it had a higher overall rate of return and lower volatility if you add it to a portfolio of stocks and bonds. And then when you add it gold with a yield, it has an even higher overall rate of return with lower volatility. So they're both good, and they're both vitally needed in a portfolio. But the question of how to do it, obviously you're introducing more risk whenever you do something that has a yield, more risk than just
the first thing that needs to be said, and the first slide in literally every deck we put out, is that without, there's no such thing as a return or a yield without risk. Anybody promising you that, you should run. And now, of course, the crypto space, not to take any cheap pot shots there, but the crypto space, some of those old slide decks are coming out of what these companies were promising was like risk-free returns of 8% or 18%. And, that they're going to really get burned by their own words. But, my personal theory on this is that the people that, bring themselves to the point where they want to actually lease their gold and lend their gold via bond program also are going to have some physical gold that they're going to hold.
Right.
That's not all or nothing. It's not either don't hold any gold or put it all in yield. There's going to be some way, some balance of like, okay, some in the yield, some, as one would hold cash versus investments,
right,
in dollars. Not every dollar is put into, long-term bonds, for example. And it never was that way. Even in the time of the gold standard, people would have gold coin, in their pocket or their sock drawer. They would have some maybe in a bank safe deposit box, and they would have some deposited to get a return. And everybody sets that balance based on risk preference, time preference, liquidity preference. Economic theory has all kinds of different angles for looking at that. And probably the same thing will be true with the state government. My guess would be, if Wyoming passes this, in the first instance, and if the treasurer decides to go forward and do some sort of gold lease, my guess would be that it would be like 1%, that he would just barely just tip that first toe in the water. But what happens is then, oh wow, that was cool. But I got a return on it, but it was only 1% of the portfolio. And so next year, then he would dip 2 toes in.
Right.
Then over some period of years, eventually it sort of asymptotes at whatever their comfort level is, which is probably less than 50% anyway, I would think.
I think it's all about just taking that first step and getting the system in place to understand it, and basically prompting the treasurer, hey, this is important. It's a missing asset class. We have tremendous impetus right now to look at gold and silver, given what's happening in the financial system. We're sitting ducks. We don't have to be sitting ducks. Let's get up to speed on how to deal in gold, how to hold gold, how to value gold, and potentially how to invest in, gold instruments or gold bonds and leases. And that's all this bill does. I mean, it's not that, they're actually looking at a Wyoming stable token right now at the same time. That passed the Senate at the same time. That's, I don't want to cast aspersions on that, but the point, it's linked to the dollar. It's crypto Wyoming dollar. And so, I mean, they're willing to try innovative things like that. And it was interesting. There was one representative who was in favor of our bill, and she said, if we can vote for a Wyoming stable token bill, we can certainly vote for a bill that allows the state to own gold. And given its history, and it's not new, and it doesn't have this cloud, so that argument resonated. That said, it only passed 16-15 through the Senate, and of course, it's like I think we got 1 Democrat out of 2, because there's no Democrats in Wyoming. You have to be a Republican to win a primary in Wyoming. So you have, don't have many Democrats. But we got 16 votes. It was bipartisan, but it was close. And unfortunately too close, but it moves forward. So we'll see what happens in the next couple of weeks in the House.
That's very exciting. I think I was there in 2018. Is this the same treasurer? Because I'm pretty sure I met with either.
No, you were there in 2019, I think. But it is the same treasurer you met. Yes.
Who seemed receptive at the time.
Yeah.
And is this the same bill sponsor that I met?
No, Roy Edwards died actually. So this is well, you may know Bob Iod. He wasn't in the Senate.
That's what I was thinking of.
Okay. Oh yeah. Bob was out on the outside supporting our efforts, and now he's a senator, and he was the sponsor of this bill. He just got elected. This is his first bill that he's passed through his chamber.
Oh, so wow, very cool.
It's a top priority for him. But the state treasurer is supportive, Kurt Meyer, and the Senate Majority Leader was also a big advocate. So Larry Hicks, and he was vocal on the Senate floor and during the debate, which you can see if you go to moneymetals.com. There's an article. You can actually watch the 20-minute debate of the final passage in the Senate, which was interesting. And then, we'll see. There'll be a House hearing probably in a couple days. But, there's another bill I should mention. There's a bill in Missouri that would almost do all the things that we're trying to get done in Wyoming. That's being voted on for third reading today in the Missouri Senate. It's already passed the committee. It would declare gold and silver as legal tender. It would remove capital gains taxes, and it would allow for taxes to be paid in gold and silver. And it would allow the state to hold gold. It doesn't talk about leases or bonds, but it has many of these other aspects. So that kind of comes out of the blue in Missouri because, we have a sales tax exemption there. But there's some sound money forces there, and they're very energized, and they seem to have some momentum, and we're doing what we can to support it. They even had a provision to have a state depository, but they stripped that out because it's just so much all at once. And I don't think it's necessary to consider that at this stage in a state like that. Too much objections, too much cost, too little understanding.
Right.
So yeah, there's a lot of very interesting bills right now.
It sounds like, from my understanding, that once you get one small win, no matter how symbolic or kind of, maybe different than some of the other bills that have passed, other states feel kind of that competitive pressure to say, well, if Wyoming did it, yeah, maybe we're a step or two below on that sound money index. But if we pass our own, bill here, or if we amend our previously passed bill, there's this ratchet effect, which when everyone starts to compete, you get actually a positive outcome instead of, in politics, what's usually the opposite, a competition to the bottom.
100%. That's part of the dynamic we're seeing. You especially see that on sales tax, because now you have states, and I'll just give some examples. Mississippi, there's a Mississippi bill to repeal the sales tax in Mississippi. That state is now surrounded by states that have no sales tax on gold and silver. Kentucky, there's a bill that's being introduced next week or possibly this week. Same thing, surrounded by states without a sales tax. Wisconsin, sales tax repeal, surrounded by states without a sales tax. So you start having this, this, like you were like an outlier. This is an outmoded, even controversial practice of taxing gold and silver purchases. And so you're able to really, and they're looking at this like, we don't want to be like the only state. I mean, there's even business reasons. Put aside the ideological. You got the business reasons. You got coin shows won't come to your state. They don't want a sales tax collector milling around, checking everybody's certificate. All these out of state, out of town people getting nailed. The coin industry, like, we're not even going to go to a state that has a sales tax. Then you have customers that cross state lines. If you're surrounded by states without sales tax, people will go to the next state to buy their gold. It's worth it. Theoretically, if they bring it back into the sales tax state, they're supposed to pay a use tax, but they don't. And so, they probably don't even realize they're supposed to. But the bottom line is, it's bad for business, putting aside the sound money aspects. And so I think on the sales tax, we've gotten to that point where there's so much momentum that it's just really making it less and less difficult, if not easy. Don't want to say easy, but it's becoming way less difficult because of the fact that, we now have 42 states. And so, hopefully we'll achieve the same thing. I know that at some of these, conservative legislator or liberty oriented, conclaves, there's presentations. JP Cortez goes to a lot of these things. Legislators will, compare notes about what's being done. And with everyone talking about inflation right now, it's the number one issue or number two issue in the country. And so this is part of that solution. And I think for all these reasons, we're just seeing a tremendous amount of enthusiasm and momentum.
I was going to say,
we haven't passed anything yet this year, but we'll see.
There's a very interesting thing in the, I don't know if I could call it political macroeconomic backdrop to all this, which is there's overt discussion of, and a lot of economic thinking is wrong, but in the mainstream thought, there's this trade-off between inflation and employment. And, there's a very deliberate sort of callous, let's render some people unemployed to reduce demand and reduce consumer prices, or at least slow inflation. And, for a lot of years, that kind of conversation didn't break out into the public awareness. You have the Fed, most people have no idea what the Fed really does, and it's supposed to keep the money stable and employment stable, and nobody really thinks anything more about it. And as long as things are kind of, sort of, almost okay, they weren't really okay, but most of those years in the last, 30 or 40 years, most of those years seemed okay anyway at the time. And then you had a crisis every once in a while, and then the Fed, visibly gets involved and tamps it down, and the Treasury has a, whatever bailout, and then, things go back to normal. But now there's this, calculating, let's unemploy people to keep the money more stable. And of course, the other side of it is, no, let's keep people employed and damn the inflation.
Yeah.
And
so it's just now the choice is just people are given these two bad choices, and everyone's talking about it. It's like, why are these the choices we have? High inflation or high unemployment, or both.
And there's a quote from Milton Friedman everyone thinks he was this free market guy, and that's one of the axes I grind. But there's this quote where he's talking about daylight savings, and he said, now you might say that if anybody wants to, get up later and in the winter and wait for the sunrise to get up, they could do so, and everyone can set their clocks however they want. But isn't it so much more efficient to have a master clock? And he's analogizing to, sure, all the employers and all the workers could negotiate and renegotiate their wage agreements, but isn't it so much more efficient to just devalue the currency and save all these people the trouble of renegotiating? Well, of course, anybody who's holding savings is like, wait a minute, I'm collateral damage. You said it would be easier to debase the currency to save all those other people the bother of having to renegotiate. But now you've just, decimated literally every year, decimating my savings by taking 10% away. And that, whole concept has now exploded back into the public consciousness where it had been dormant for, arguably 4 decades. And so people start to think about, wait a minute, what about this gold thing that they can't debase? And that's the sea change that, as we talk to our customers, we see that, underway right now. And it's kind of unfortunate. I mean, it's fortunate in the sense that people are thinking about gold. And anyway, they'll be thinking about gold. I'll take it. I'm happy with it. But in a way, it's unfortunate because it's taking a tragedy. It's like some car has to crash and somebody has to die before people think about, we should really put seatbelts on our kids and not have this, recur. It's tragic that had to happen. But I think that's a big part of the backdrop of why, so many people are thinking about it at this moment in time.
Yeah. And yet at the same time, I think it's still a very small minority of people that are thinking about it, in terms of gold or even policies related to gold. I mean, people are generally aware of and concerned about inflation, but I would say we still have a big communication challenge to kind of steer people and their minds in the right direction. Because, I mean, if you look at the interest in gold and silver just as an asset to own or as a form of investment, it's still very, very, very small participation. Very small.
I agree with that. I was going to say, but it's a slightly less small today versus a couple of years ago.
Yeah, it's double. It's double, but it went from 0.5% to 1%. But I mean, it doubles again. That's 2.
I'll share something that one of our board members said to me when we were talking about this topic and changing the world and all that. And he said, supposedly, Lenin wrote a letter to Marx back in, I don't know if it was the late, like 1890s or 1900s. And I don't know when Marx died, so this may not actually work. But the story as I heard it was that Lenin wrote to Marx and said, the success of the revolution is assured because there's now 10 people that understand Marxism. And, you could look at that and dismiss that and say, okay, that's cocky, but there's a sentiment there that, okay, when an idea is, obviously I don't think that Marxism is good, but there's no question that, the world was dry tinder waiting for that idea to burst into conflagration that swept the world. And that was a rotten idea, so it was harmful to adopt it. But there's a certain sense that when the tinder is dry and ready for that idea, it doesn't take all that many people that get it. And most of the people, in the mainstream will never really get it. They'll go along with the idea because they're swept up with the crowd. There's a video that is popular in startup communities and venture capital communities. I don't know if it's called Dancing Man. I don't remember what it's called, but it basically shows a bunch of college kids, kind of sitting there picnicking on this grassy hill. And this one guy gets up and he's kind of freaky looking and he starts to dance and he's kind of like spastic.
I've seen that. Yeah.
And, and there's a narrator, like voiceovers, like some venture capitalist or something, or some consultant. And he's like, this isn't the important part, blah, 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 blah. Let's see if all the other kids will ignore him. And then another kid gets up and the narrator says, this is the important moment. It's the first follower. he's the one who creates the movement. Other than, without him, it's just a spastic guy, jerking and herking and jerking his way on the hill. But having a follower has now set the seeds for this to be a movement. Let's see if anyone else joins in. Sure enough, someone else joins in, and now you have a movement. And the moral of the story is make it easy to follow, make it easy for people to participate, make it fun, make people feel like they're belonging, like all these things that as the thing goes on. And by the end, every last kid is not sitting there picnicking anymore. They're all dancing to, whatever the music was. And,
I've seen that video, and that was really compelling, actually. It's a microcosm of the network effect.
So do people really understand? Is there a large number of people that are thinking about gold right now? Absolutely not. But is this the moment that the tinder is dry, and the gold idea becomes the spark that sets the world alight? Remains to be seen. I wouldn't want to prematurely declare victory, just yet. But it's things like this Wyoming bill that give me, encouraging signs. I'll put it that way. That there's a lot of the stuff that's falling into place now. That I thought after 2008, that the response of both the monetary authority and the fiscal authority, the Fed and the Treasury after 2008 was so insane that literally every chart, if you looked at Fed balance sheet or anything else, any chart, basically everything up till 2008 looks like a flat line. Now, if you cut out after 2008, it wasn't a flat line. It had a slope, and there was zigs and zags and everything else. But when you saw what they did in 2008, basically a flat line just about at zero, and then this moonshot, or other graphs, would just completely fall off the cliff.
Mm-hmm.
And and there were so many of them that I thought, my God, everyone is going to come and realize that this system is failing in a fundamental way. And a few people did. But then what happened was the Fed tamped it down, and they got the market to come back and buy, junk bonds and everything else. And then everyone said, oh, see, it's working. The Fed did what they're supposed to do. They're a bunch of really smart technocrats, and they did all the necessary things. And we don't understand it, but they did the right thing. And, everything was fine. By 2011, victory was declared. And, but then, we had another little eruption. What about 2017? And then obviously a much bigger eruption when COVID lockdowns hit. And now we're dealing with the hangover from the COVID stimulus. And each episode, there are more people that, kind of open their eyes and look around and say, oh my God, I had no idea this is what our masters were doing to us. And anyways, this is super, super exciting. And I'm gratified to see that the early efforts that I did kind of helped lead to this as I bowed out. And but I'm also glad that I had that chance to go to Wyoming, meet some of those folks. Maybe I planted a seed or two in some of the things I said, I hope. And now just really grateful, and thank you for your efforts. And the Sound Money Project. No, what do you call it? Not Sound Money Project.
Sound Money Defense League.
Sound Money Defense League. There's something called the Sound Money Project, which I've written for, but that's a different thing. But I'm really grateful for your efforts and JP at the Sound Money Defense League. And man, just to see virtually all states getting rid of sales tax is just an incredible thing to see, because that's not how the world was for many, many years. So you really can change the world.
Yeah, and it's just so much easier to do public policy at the state level, where with organization and grassroots, these legislators don't usually see that on any one bill. So at the federal level, they get hammered on all the time by their constituents. At the state level, our bills have become, in some cases, the most popular, or the one of the most talked about bills at the state level, because the grassroots, we have very enthusiastic people. We're sending out emails and direct mail to people in the state, asking them to contact, giving them something to do. And they're doing it. And they're doing it in a manner that these legislators are not seeing on other bills. And yet there's no real opposition, at least for the sales tax stuff. Nobody really opposes that. So it's like all this support, no opposition, it makes it a lot easier to do.
That was something I used to argue in Arizona, and I remember going to Texas and at least one or two other states, is that, look, most of the legislation that comes before you creates a winner and a loser. And winners are going to be here telling you how great it is, but you're also hurting somebody, and somebody's going to be pissed off and want to vote against you in the next election.
Right.
But this stuff to lift this tax or makes the state slightly friendlier to people that have gold doesn't create any losers. There's nobody here showing up saying you're taking away my livelihood.
Right.
You're hurting my kids. If you cut the school budget by 1/1000th of 1%, everybody shows up and says, you're hurting children.
Right.
You don't have that with this. There really isn't an opposition other than sort of the broad-based ideological antipathy to gold. But those people aren't really motivated to show up because it's not really affecting their lives. And so the testimony in every bill that I went to, the people that showed up to testify in the chambers, it was completely lopsided. You'd have 17 people that wanted to get in a word and say, yeah, please pass this, and zero. Or you had the legislative council said there's a constitutional issue, or you had a fiscal note, and the treasurer said, well, by requiring us to accept payment from the public in gold, we now have a problem of we don't have the technology to detect counterfeits. We don't have the security. We don't have a safe in our office. You had those sorts of, I guess I'd call them quibbles.
Technical objections, yeah.
But you didn't have the public showing up saying, don't pass this, you morons, you baby killers. You didn't have any of that. You just had all the people showing up saying, look, it's constitutional, it's sound money, so, protect us from the Fed. And so the politics are very one-sided, which is favorable.
Yeah. Ben, you were jumping in there.
I wanted to ask you because, change occurs on the margin, and a lot of people are going to be listening to this and saying, wow, Stefan's doing incredible work. Maybe they're clients of Monetary Metals and want to know how they can get involved kind of in the Sound Money Defense League. What are some ways that, let's start with a simple question. What are some ways that an individual who kind of has no experience with any of this stuff can get involved, either specifically in Wyoming or just in general with Sound Money and Sound Money initiatives?
Yeah, well, I guess, first of all, we have a lot of information on the soundmoneydefense.org website and the moneymetals.com website. So sign up for the email list on either of those sites, moneymetals.com or soundmoneydefense.org. And we will be able to contact you when we have a legislative project in your state. We have literally about 700,000 email addresses. Many of those are customers of Money Metals, and many are just people that are on our list. If you're a customer of Money Metals, we are sending out direct mail in targeted states. We just sent out 8,000 letters to Wisconsin today, and 7,000 letters to Minnesota. We're sending 3,000 letters out to Mississippi tomorrow to our customers because we have their mailing address, and we're telling them, hey, contact this committee chairman or these people. Here's the bill numbers. Here's what's to say. So we're doing that by email and mail. So, the way to engage would be to get on our list so that we can contact you. And when we know of a bill coming up, we can alert you. You can obviously just follow the news or just on your own contact people. If there's a bill in Wyoming, which there is, the issue right now is the State House. We want the State House to pass it. The bill number is SF 101. You can contact, if you're in Wyoming, contact your State House member and contact the members of the Revenue Committee and tell them to pass the bill. And, that stuff really works. Honestly, it really does work, particularly at the state level. Going in with arguments is great, but, when it comes to politicians, their sole focus, or at least for many of them, is getting elected. And, I guess it was Senator Everett Dirksen who said in a big, back in the 60s, and there are lots of big debates, and he was the Senate president pro tem. He said, when I feel the heat, I see the light. And that's really fundamentally how it works. Politics is not about necessarily making the right argument. You don't have to be right. It's good, we are right, but that's not really necessary to win, as we know. And so, grassroots activism really works, particularly at the state level. So that's how people can help.
That was my first question. My second question, maybe it's a little more nuanced, which is, let's say I'm a politician or I'm, somehow involved in state level politics. What's a way that I could personally get involved? Maybe I want to, pass a bill or sponsor a bill that looks similar or has some sound money initiative. Let's say I'm watching right now. How could I get?
So we have we publish the Sound Money Index every year, and we go through and we rank every state on about 13 policies related to sound money. And basically, and then here's the map. But basically we have model bills for most of these pieces of legislation or these policies. And so we would be happy to, if somebody contacts Money Metals or Sound Money Defense, there's a contact form, whatever. If you're a legislator, you can reach out to us and we will provide you with model bills. We may even, provide with grassroots support and testimony for the bill. Can help, draft or modify bills if needed. And so we're there, and that's, there's some opportunities to look at what other states are doing and just grab the language. We're seeing that now. I mean, some of the bills, maybe a third of them are bills that we didn't initiate. They just grab language, and some of it's good language, some of it's not as good, but either way, there's a lot of enthusiasm, and it's just happening even without us. I feel like we played an important role in fostering this, but obviously we can't take credit for a lot of this.
And Keith, I kind of want to throw some of the final questions to you. So, that you shared that quote about, well, now that 10 people know how this works, it's game over. Victory is sealed. Can you explain to at least the two of us listening? I know Stefan definitely knows, but to anyone listening in the audience, what is the benefit of a gold lease? What is a gold bond? Maybe some people have never heard of it. Maybe they're not clients of Monetary Metals. What is the kind of 1 minute elevator pitch as to the gold standard through this kind of gold bond or gold lease mechanism?
So, very broad question there. I think the aspect that I'll focus on is that there's a win-win, deal to the lessee. It's inventory, right? So if you had an inventory of, nuts and bolts or little copper fittings, those are base metals. They're relatively cheap. You may not necessarily need to worry about financing your inventory of nuts and bolts. Your hardware store, it's, may add up to a few dollars and whatever, it's pocket change. But gold is, $1,900 an ounce. It's got to be financed somehow. And if you borrow dollars to finance it, then you have this mismatch between the financing, the liability is dollars, and the asset is gold. And if the gold price drops, you could be insolvent if it drops enough. So then you have to hedge. And if you lease the gold, you don't have the hedging problems and risks and costs and complexities and management headaches. You just have the inventory you need without the price risk that you don't want. And on the other side is somebody who owns gold, who by allowing that gold to be used by somebody else's inventory is getting a return on it. And so it's just a nice win-win deal. That's what free markets are at the end of the day. Strip out all the ideology about what works and what doesn't work and what's fair and what's not fair and all this. It's deals don't happen unless they're win-win, without somebody coming along with coercion with a gun and say, well, you're gonna have to do this anyway, even though you don't choose to. So how do you get a gold standard? It's when anybody has the right and the opportunity, but not the obligation to put their gold to work, financing something productive. As we saw with crypto, there was all sorts of promises of things that called themselves yields, but it was all self-referential. It's now become infamous, the Alex Machinsky so-called flywheel, which is basically a Ponzi scheme. Well, you're getting all this deposit in, and it finances the purchase of more, and then more people buy more, and as long as the price keeps going up, the Ponzi scheme seems to work. But there's no actual yield there because the only money that comes into the system is the money of the next person to buy in. And when you finally run out of buyers in, then, it collapses. But to have a sustainable system-wide, yield, it's because you're financing production, and the yield is paid out of part of the profit generated from that production. And so when anybody that wants to deposit their gold to get a return on it can do so, that's a gold standard. That's a working gold standard. And so, leases is, the first step, towards scaling that in a big way.
Right. Well, Keith, thank you for the explanation. Now there's at least 10 of us who know how this works. So victory is certainly sealed. Stefan, I want to say thank you, obviously, for the work of the Sound Money Defense League. But where can people find you? Where can people get in contact with you? Let's say, I'm a Florida legislator and I go, wow, this episode was awesome. I want to get on the top of the list. I want to beat Wyoming. What's the best way to do that? Where can they find you? Where can they get in contact and just learn more about Sound Money?
Yeah, go to soundmoneydefense.org, and there's a contact us form there. That's one way. We're also on Twitter, and so is Money Metals, that Money Metals handle on Twitter. So you can tweet at us, you can email us, you can call us. There's a phone number on both websites, moneymetals.com and soundmoneydefense.org. It'll come to me or JP if it's related to this, topic of policy. So I'll put out JP Cortez's email as well. So he's a JP Cortez. So it's jp.cortez@soundmoneydefense.org. jp.cortez@soundmoneydefense.org. So that's probably the best contact person for legislators.
Stefan, do you have a handy reference for Wyoming House of Representatives members, for people that live in Wyoming to be able to contact?
We are it's being assigned to a committee today. So as soon as we know which committee, then we're going to issue something out. So I can email that to you guys, and then you'll have it and you can forward it or make it available.
Yeah, we should attach it to the to this video.
Sure.
And then I know we've got a couple of folks, in Wyoming, including one of our directors, that were already asking about
Okay, good.
how can they help. So
Well, they can obviously contact any member of the House, but we'll specifically be focusing people on contacting the committee.
Right. At this stage, right, it's that committee, absolutely. Yeah. And then once it passes that committee, I'm being very what's the word? What's the word? Using positive assumption. I forget the
positive reinforcement, right?
No. When you assume a good outcome, you don't say if we win. You're going to say when we win, then we're going to do this. So assuming the positive. After that, then we're going to want people to reach out to everybody in the Wyoming House and not just the members of the committee. Once it passes that, then it's on to the governor, and everyone should reach out to the governor.
Yeah. And if you're a constituent in Wyoming, you should definitely contact your own state House member right away and tell them you're interested in this bill, you want them to support it. If you're an actual constituent for that person, they may feel like they need to follow up on it. They might talk to the committee member if they're not on the committee, that kind of thing.
Right.
And it's Senate File 101, SF 101, and it's the Wyoming Legal Tender Act amendments, but it's SF 101. That's the bill number.
All right. Well, Stefan, thanks so much. We'll make sure to have all of this kind of information in the description, how people get in contact with you, how can they get in contact with the Sound Money Defense League. Want to say thank you so much. It sounds like 2023 is going to be a killer year for Sound Money. And we look forward to having you on 2024 when every single state is issuing gold leases and gold bonds. We don't use dollars anymore, and we can pay you in gold and silver.
That's when your show collapses. So
there's nothing to say anymore because it's all been said and all been done.
I will happily relinquish this role.
We're going to hold you accountable for that.
Okay, I'll do my best. But
Stefan, if I get fired because we go back to a gold standard, I will be the happiest unemployed person on the planet. So thanks so much, and we'll see you next year.
Thank you. Thanks, guys.
All right, take care.
This episode was brought to you by Monetary Metals. Monetary Metals is a different kind of gold company. Others buy and sell gold. Monetary Metals operates the Gold Yield Marketplace, a platform of products that offer a yield on gold paid in gold to investors and institutions, and are gold financing simplified, reliable financing denominated in gold with a built-in hedge for gold-using and gold-producing businesses. To learn more, visit www.monetary-metals.com. See you next time.
Well, that will do it for this week. Be sure to check back next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Gleason with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes. For answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds, call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by to answer your call during business hours, Monday through Saturday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.